is evolving and businesses are having to adapt fast. The latest Africa Risk Reward Index, now in its 10th edition, tracks 24 African markets and highlights a continent of contrasts. Reform minded economies are pulling ahead, while some of the region's anchor markets face persistent challenges. The report also explores emerging trends from industrial policy and regional corridors to the rise of local capital that are shaping how companies invest and operate across Africa. Joining us now to unpack these findings is Shawn Duthie, Director at Global Risk Consultancy Control Risks, who is based here in South Africa. Shawn, good morning and thank you for making time for us.
Good morning. Thank you for having me.
So the 10th edition of the Africa Risk Reward Index is out. Looking at the continent as a whole, what are the key opportunities as well as risks it highlights?
Well, as you said, this is Control Risk's 10th edition of the Africa Risk Reward Index. And our main message is that, especially as seen over the past editions, that Africa is not characterized by sweeping continental transformation, but incremental gains and strategic adaptation by individual countries. So for investors, I think country selection and local nuance is quite critical rather than focus on Africa as a whole. But if we are looking at it as a whole, there is a real push by African countries for greater autonomy in the global economy, which is opening up opportunities across infrastructure, manufacturing, and finance. So the companies that work with African governments as partners and collaborate in these sectors are the companies who I think are going to do best and take advantage of these opportunities. Risk-wise, particularly in the extractive sector, resource nationalism is on the rise. Our report found that there were at least 17 countries working to create or review domestic value chains in mining, and many are reviewing the local content rules, such as in Namibia and Tanzania. So I think for a lot of investors looking to go in, this is becoming a bigger risk for them.
So 24 African markets were tracked and highlighted. Which were some of these countries and what made them significant to give a better overview of this topic? You mentioned Namibia.
Yeah, well, Namibia has been one of the improved, but the most improved have actually been Angola, Cote d'Ivoire, Zambia, and Morocco. So these are mid-sized economies that have really prioritized pro-business reforms in the recent years. Also, other ones that improved were, and they're a little bit different, but were Ethiopia, the Democratic Republic of the Congo, Zimbabwe, much higher risk still due to governance issues and conflict, but there is growing economic potential. As far as underperformers, unfortunately, South Africa was one of them. Nigeria and Egypt as well. These are the largest economies in the continent, but they will all be set by macroeconomic and governance challenges, which constrain their potential. Other underperformers were Kenya, Senegal, and Botswana. A lot of economic potential, but unfortunately, they were dented by policy instability and, in Botswana, external factors.
The index points to a story of divergence. Can you give examples and explain what this means for investors?
I mean, I think for divergence, it's about looking at different parts of the continent and not treating having an Africa policy. But when you're looking at where to invest, looking at different countries and what is the opportunities and risks in each of those countries.
The ARRI suggests Africa rewards companies that build resilient regionally integrated models. What does this look like in practice for businesses across multiple markets?
Yeah, it's a good question. I think that type of strategy for a company and for an investor really understands local policy and regulatory environments, but thinks of the markets and end consumers from a regional perspective. So we've seen a lot of South African retailers who are doing this in response to the global trade and tariff pressures. You know, they're operating in individual countries across the continent, but sourcing products and people from everywhere, but still ultimately viewing the opportunity at a very regional level. And I think that's a strategy that businesses will need to take going into the continent.
Industrial policy and corridor initiatives are reshaping African markets while local capital is rising. How should companies factor these trends into their operations and strategies?
Well, I mean, all of these are positives for companies operating in Africa and should be taken advantage of to spur growth. I think regional demand is going to hopefully rise when the African Continental Free Trade Area comes into greater in effect. And I think South Africa really is pivoting to focus much more on these regional trade corridors rather than looking too much externally because of the trade issues that are happening. There's also been a real surge in different types of financing, which we cover in the report as well, which I think will help companies take advantage of all these positives and not rely on other countries. So if you look, for example, Ethiopia finance, it's the Grand Ethiopian Renaissance Dam, all through diaspora funds and local taxes. Pension schemes as well, also growing across the continent. And I think a lot of companies will be able to take advantage of these policy changes, these quarter projects, the local capital to help fund their growth across the continent.
So, based on these ARRI findings, what would you say is the single most important strategy for companies looking to succeed across Africa?
Well, it's a good question. I'd be tempted to say that the single most important strategy would be to come to control risks, and we can help you. But I would think for especially smaller companies, especially those operating in South Africa, is understanding the nuance of each country. You can't have one grand Africa strategy and just use that in South Africa and Botswana, Kenya, Nigeria. You really have to understand the markets. You have to understand the policy, the regulations, and how everything works there. And I think same in South Africa, actually. I mean, you can't take what works in Gauteng and put it in the Western Cape or KZN, all very different markets. So I think that for me, the single most important strategy for companies to succeed is to know your market, but really know those nuances.
What else would you say is notable about this index that maybe we haven't touched on, and how is it accessible to companies?
Yep, so it can be accessed through our website, controlrisk.com. And for me, what I really like about it is it takes the kind of a quantitative measure, which we do with our partners from Oxford Economics, but also a qualitative measure. I always find it interesting when a lot of these quantitative ones come out and they say that the best places to do business in Africa is Seychelles and Mauritius. And they're not wrong. It's a very good policy environment. It's good to have a holding company, but I don't think it's a market that most people are thinking that they're looking to enter and sell their goods. So I think what RE does is it really takes the quantitative and qualitative and the risks and rewards of those 24 economies and breaks it down of where companies should be heading.
Shawn, thank you again for your time. We appreciate it here at Channel Africa.
Great. Thank you very much.
Shawn Duthie is director at Control Risks based in South Africa.
A fresh morning, a